Hello traders, the title of the video is WXY Elliott wave example that deserves a trader's attention. Your attention please, traders. WXY wave example that deserves your attention. Let's get started, alright? So we are looking at Coca-Cola. So if you are okay in this world, you should be able to know what Coca-Cola company is doing. It's producing beverages, soft drinks belonging to what we call the consumer defensive sector. All right. So we have here a WXY wave. So for this exercise, okay, I would like to ask traders to take a 60 seconds and try to find out where is that WXY wave. Your time is starting now. So some traders may say, George, you can't tell me that. All right. So with my friend, we can look at the chart, all right, and admire the chart. I say to traders, if somebody wants to learn about Elliott wave, you let a person sit down in front of a computer and tell that person to admire the chart. If that person find it very offensive that you are asking him to look at the chart, you know that that person cannot use the Elliott wave principle. All right. So, did you see that? Did you spot the WXY wave? You still got 20 seconds. All right. You see it. You see WXY wave. Very powerful Elliott wave pattern that you must master. You must be able to spot it very fast. What I recommend to traders that are day trading, swing trading, use the monthly chart if you are looking for a WXY wave. Time's up. All right. So what I'm going to do, so in order to recognize a corrective wave, one must first find what? The impulse wave, the motive wave. Because anytime somebody says to you, can you spot the corrective wave? Look first for the motive wave. The corrective wave will correct the motive wave, will correct an impulse wave. So therefore, where is that motive wave that WXY wave is correcting? If you do not find one, just smile and know that, okay, probably it's just a consolidation or something else that is going on. Any Elliott wave corrective wave must correct a motive wave, an impulse wave, whatever you call it. Right? So we have an impulse wave. There was a trending first. So that trending first has started from here and has ended there. Some of them may say here, and I say yes, I'm aware of that. I'm aware of that because I went to your mind. You may say, George, we will talk about that. So let's say that it has ended here. Okay. So now that we have found that corrective wave, that motive wave, we will now start beginning. So our WXY wave will be somewhere from here going this way. So talking about WXY wave, we are talking about three waves, W, S, and Y. So where is the W? According to the Elliott wave theory, the W cannot be a triangle. I say to traders at a 2-4 Elliott wave, never say never. And that's the theory. We can't ignore it. Okay. The X wave is a trending first that has failed. All right. So there is for new traders. Sometimes traders, because I notice sometimes some new trader will join us. We subscribe to our channel, and they are asking questions, relevant questions. But we have already covered those topics, so I don't want to annoy traders that have been following us for years, going back to the same story again. So what I would say to those beginners or those traders that are learning the topic of WXY wave, there is a playlist, okay, on our channel. Just YouTube search WXY wave trading by 2-4 Elliott wave YouTube channel, and you should see a playlist. If you check our playlist, you see a WXY wave, okay? playlist talking about WXY, okay? So without too much story, all right, because I promised to keep the video short, this is the W price. So that's the first corrective phase. So multi-wave and move down, that can be level. So the W can be a flat correction, a zigzag. In theory, they say it cannot be a triangle, but never say never. Can be any type of ABC. It cannot be ABCD, which is a triangle. It cannot be a triangle, okay? Zigzag or flat correction. Usually you will see a flat correction. That's why I was telling you that sometimes we see that the trend has ended here, George, and we have an expanded flat correction. We say A, B, C. Now another trader did ask me a question, the difference between WXY wave or whatever, ABC and so on. I think there's already a video about that also. All right. But I'll come back to that, okay? I'll come back to that. Sometimes we see it's a flat correction. First move down, first move up. 1, 2, 3, 4, 5. Very messy down. That it's not very clear. We don't want to waste time on that. I put that the trend in first has ended here. Everybody will agree to that. So we stop all the argument. So the price calm down. Quite messy. That's what we are saying. But no one can deny that, okay? We can disagree about what kind of corrective wave is this one, blah, blah, blah. All right? Well, we cannot deny that, all right? That move down, which looks a little bit like a triangle, in fact, it's not a triangle, okay? Move down is correcting that multi-wave, all right? So we can label that. That's the first phase of the correction. So this is what's happening. That's why I was saying to traders all the time, the area we count is one step at a time. So what's going on? Price going up, okay? Trading first completed, a corrective wave is beginning. What do we do? Practically trading, you apply Fibonacci retracement to the trending first altogether. Now which level do you highlight? The zone between the 50% and the 61.8% level. You are practical area weight trader now, all right? And because the first corrective phase, usually for bullish stocks, blue chip stocks, company that are established in place, very often they find a support in the sweet spot zone, which is the zone between the 50% and 61.8% Fibonacci transfer. So as area weight trader, an impulse wave is completed, the multi wave is completed. Apply Fibonacci retracement and highlight the sweet spot zone 50%, 61. So you can see here as the correction is beginning, that's what everybody's watching. Look where it stopped. That's the median line, the red line here, that's the median line between the 50% and the 61.8% level. See, touch the sweet spot zone. It didn't go below it. Look at that. Support, 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 support. Boosh. Up. You see? Now, again, as I said to trader, if the wave become very messy, you see here it's blah, 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 you don't know which corrective wave it is, don't worry. I'm saying again, if it's too messy, concentrate, all right, on the market pattern. Rising channel, declining channel, horizontal channel, triangle, all right? And if it's not still clear, you have to go to the higher time frame. So because I'm the monthly chart, if I was here, if you were here that time, it's not very clear to you go to the higher time frame. All the price did, you can see the declining channel there. It was going down, correcting, blah, blah, blah. It was oscillating in that declining channel up to the sweet spot zone. But now you see it breaks above that channel, yes or no? Now it's alerting that an impulse wave is beginning because the corrective wave is confined in that channel, yes or no? But now the sentiment is changing. This move out, that's the X wave. You see how the market pattern was useful to quickly spot that probably this is the beginning. So you will be using those words carefully. You'll be saying probably, not certainly, all right? You don't want to swallow your word, you want to be careful, right? So probably is the S wave. So when you were here going along the movement 20, you say, all right, probably, maybe the S wave is a very where you can see that now it's clear to us. That's what we are saying to traders. I talked about this also recently. Area weight trader situates The market, remember that video? You see, but so when traders start using area wave first, they concentrate on the area wave theory and they apply it in isolation. All right? Nothing wrong with that. But once you are growing, you want to take into consideration the market, which is the S&P 500. Otherwise, your forecast will be going up and down. 1 minute you say, oh, another minute you say another thing, and then one day you just give up. You don't want to do that. So you can see that from 2007, okay, in fact, 2008 financial crisis, you see, started here. The market S&P 500 was bearish, was going down. And it pulled down that impulse wave that was beginning. If the market condition was bullish, I believe that S wave will be longer. We may have probably 1, 2, 3, 4, 5 wave. It may go up more to retest this resistance here. But here the market caught up with this X wave. It cut it short. It's a failure of a trending pattern. It's the S wave right there. So, all right. So now this supposed to be, see here, you know your common set trend line along it. If you go in now, you'll be in a rising channel. Right? Now the trend line is broken. You say, whoa, looks to me that S wave is failing. So we expect another correction wave. It's going down. You watch the sweet spot zone of that trending phase. Especially if you are trading blue chip stock like Coca-Cola, and the fundamental are solid and they are making money. These are defensive stock. This is a defensive stock, by the way. All right. It didn't go down very much, you see. A lot of stock went down big time, up to 78.6%. Just went down big like this. Okay. All right. So now, this is the what? You get it right? The Y wave. Okay, hold on, please. The Y wave. W, the first correction, correcting what? The trending first. The S wave normally can be, so if you are talking about a higher degree wave count, we may say all these trending first will be the first wave of a higher degree. All right? And then as this correction is beginning here, we will be calling it a second wave of a higher degree. But when we were here, we don't know what kind of correction we will have because it can either be very messy and longer. And this is the case here. So when traders were here, all right, they'll be saying second wave where the W was, this move down, they'll say second wave of a higher degree. And in this move that has failed, we say, oh, so if I was recording a video for you on that day, I would say to you, oh, Coca-Cola is about to start the third wave of a higher degree, yes or no? That would be wrong. So they say, the forecast is wrong, the forecast is not wrong. The forecast is right at that point in time. But now something has changed. That's why if you want to use area wave, which I'm saying to trainers, technical traders, combining with the fundamental analysis and the trading triangle, the market first, the sector, and individual financial instrument. I've seen traders that have been that can trade very well, but they don't want to move to the next step, which means combine the fundamental and using the trading triangle, the market first, the sector, before the individual financial instrument, the heart of the trading triangle, the market first, the market leaders, economy news, and fundamentals. And people will be going around. You don't want to do that. Okay, so the S wave. Now the Y wave. Last call. So again in here, you see where it's stopped? At that point in time, no one knows whether it's going to continue to also. You see here, when it came here, people try to sell it. It's okay, yes, because they see it came, it found a resistance there. As it's coming here, the bullish traders say, I don't believe in this move up again. All right, now they try to sell it. Now here it is. Here it is. This is this one here. This one I'm saying to GST, WXY, Elliott traders. Find a high probability setup and go to the first best time frame to look for the signal. First best time frame for the signal and the entry. This one here is a high probability setup. Why? A double bottom or a triple bottom followed by a higher low, the first higher low, especially. So be the first. I mean, to sport, okay, participate. Well, no, let me choose my word carefully. I don't want to say be the first to enter the trade. I don't want you to do that. Participate in the first opportunity. So this is the first opportunity. That's what I want to say. First opportunity. The first high probability trading setup. This one. You see now? Now it form a higher low. So as it's going up here, you have to hold this resistance here because it can still fail. And then it goes above it. Did you see this? Did you see that it retested here? You see how you retest the prior high? This to get a higher probability setup here. Price breaks above a prior high and retest it. Those are the things you want to. Don't trade any kind of trading setup. Some of them are useless. Unless you are not tired yet, especially if you are a new trader, you are still losing money, you are making money, you are still losing money. So you have hope, all right? But until you realize that you lost so much money, then you start becoming more conservative. So you can look at some trade and just smile and walk away and say, I'm not taking that. I don't want to be part of that. So be very, very selective and defensive. Give yourself the best in life. This is a high probability setup. All right. So we have now, okay, so we have now identified the trending first. And a WXY wave is three components, three corrective waves. The first one can be a flat correction or a zigzag. Theory, they say, can be a triangle, never say never. The second one is normally, it has the shape of a normal impulse wave. It does, the internal wave of the S wave very often may not even violate the area of principle. It will look like a trend. It is normal. Why? Because traders were expecting, and here, at this point, I'm talking about this particular case, they will be expecting the third wave of a higher degree, yes or no? But something has changed the progression of the price. So when somebody is saying that a trend is beginning, or somebody say that this is the beginning of the third wave, that third wave can still fail for many reasons. This is about the trading triangle that I'm talking about before, all right, and a macroeconomic environment. But here it is, 2009. Here again, I'm referring to the S&P 500. So you may say to me, George, why do you care so much about the S&P 500? This is the market. Like it or not, you just need to acknowledge that and work with that. Don't fight it. Do you like to fight every day? I don't. Sometimes I see some comments on the comment section. I say, well, I don't want to fight. I don't fight traders. All right, don't fight every day. So here it is. So as it started here, no one knows that you come here today. So the question is now, practically trading as an alien way trader, okay, what is going through your mind now? Where is it going? Price, you see now? This is again here, you see here, this is a prior high, yes or no? This is a prior high, yes or no? It's a prior high. It breaks above it. So you see, this is what I don't like. If it breaks above, you want it to go a little bit away from it. You see, it was hanging around it. You don't want that. Now it ran away from it a bit. Is it going to give us a clear pullback, or are they running away just because of this? They may run away from it, but the price is going somewhere for Coca-Cola. Where? If you didn't get it right, well, that will be 24 lashes in public place. Now, this to make you laugh a bit. Okay? I will send you to Saudi Arabia and I'll order you. You will receive your 24 lashes if you have been following us for a year and you don't remember. So it's now heading to the 138.2%. This to make you laugh right away. I'm not going to send you there, okay? Don't worry. So it's going to the 138.2% Fibonacci extension of this trending first. I can't see on the chart, but it's somewhere up there. If you cannot see, hold on, because I can't see on the monthly chart, let's quickly go. It's not showing here also, but the line is there up there. But there is also one thing you remember, so I'll say to you, is heading to 138.2% level. So but between the 138.2% level and the 100%, which is the orange line here, the 100%, that's the median line. So because we don't know where it is, you can calculate it though. Okay. Let's put it like this. There's a midpoint target somewhere in the middle of 100% at 138.2. So just leave the line somewhere there. There's one hidden median line, okay? All right? But again, suppose, my friend, let's continue this discussion because it's becoming very interesting to myself. 20 minutes. George, you say short video. What's going on? Have you been enjoying it also? Am I talking too much again today? What's going on? The time is just going too fast. Oh, should I stop or should I finish it off? Okay, you say yes? Okay, I'll continue that. It's you who say yes. If somebody complains that the video is too long, I'll blame you for it. Okay. So now, I'll go back to my favorite time frame, the monthly chart. You said I should continue. Okay. So, you see now, so we have a trending first, okay? And then we were talking about WXY wave, yes or no? All right. Remember, it's not finished. If it failed to go above the 138.2% Fibonacci extension level of the prior trend, we can still talk about another pattern. Which one? A flat correction, an expanded flat correction. Are you getting it? So we'll say this move from here. Are you with me? Get in place with. You see, we'll say this move from here to here will be the A part of the flat correction. And this move starting from here, 1, 2, 3, going up to the 138.2% level, will form the B wave of the flat correction. And if it finds resistance at the 138.2% level or at that midpoint level and start coming down, then I will come back and say to you guys, we have a gigantic flat correction after this trending phase. Then we'll be talking about the C wave of that gigantic flat correction. Talking about A, B, talking about 1, 2, 3, 5, move down. 1, 2, 3, 4, 5, forming the C wave of the gigantic, okay, the flat correction. But you may say, Joe, you were talking before about the WXY wave. You see, the price progression is telling us something. We were here, we see the WXY wave. Is it wrong? No, it's not. It's not. Now I start going out, we see, okay, probably this is the third wave of a higher degree. But if that third wave, this is one question another trader asked me before. He said, when the third wave is going now, where is it going to stop? That's a very interesting question, all right? I think I covered it before, but I'll come back to it in another video. All right. Third wave must break above the 138.2% Fibonacci extension level of the first wave. Did you get it? The trader who asked the question? The third wave must break above the 138.2% Fibonacci extension level of the first wave. So if he failed to go above that level, this move out that we are expecting to be the third wave of a higher degree will become, okay, the B wave of the gigantic flat correction. You see, so it's just folding. The price telling us more, and we are getting it. We are flowing with it. We are not ignoring it. Okay, so here is going now. You see, all right, it's going. You see how choppy it is. All right, and again, as we are looking at Coca-Cola, you don't want to forget what? The trading triangle. You don't want to be too old before you understand this. That's what the missing pearls for stock trading. So for new trader, let me go over this again, all right? You want to analyze Coca-Cola. Here it is. In the trading triangle, Coca-Cola, you put it here, right here, not there. You put it here on your right hand side because that's what you want to try analyze. But instead of wasting too much time on Coca-Cola, you do few things first. You go and check the S&P 500. Is there a resistance level? What kind of pattern? What's going on? What's the forecast? And so on and so on and so on. What is the market telling us? The market is calling for the fourth wave, all right, of a higher degree. We're expecting a pullback from the fourth wave higher degree. Is it the best time to buy and hold? Personally, I will be cautious to adopt that strategy at this junction. Talking about the market itself. Again, when we are buying, we will be very, very cautious. Because if that fourth wave, for the market starts exhibiting that fourth wave, anything is possible. But we're not just going to sell and buy anyhow. We keep our eyes on the market. And again, here, the sector, consumer defensive. It's a defensive stock. People will drink every time. People will drink. You are thirsty, you will drink. This is a company. Recently, they make some excellent. It's how it was in fact Boeing, not Coca-Cola. Reality, they are pushing it up. Blue chip stock, strong fundamental in place, excellent business in place. They will survive. They will survive one way or another unless somebody come in and mess it up. The sector, defensive competition is quite strong. So if you want to start business, don't go into the beverage because the competition is so strong. All right, unless you have so much money, the competition is quite high in the beverage soft drink sector. Check the market first, you check the sector before you analyze the stock itself. So you do the technical analysis and you go to Google Funnel, you check, you perform Google acid test, all right? You read the economy. If you are not don't worry, all right? At least read about it. What are they saying about it? Check the news relating to this. And also check the peers, all right? Okay? But apart from that, we check also the market leaders. Coca-Cola, Dow 30, market leaders. Boeing, McDonald's, all right? ExxonMobil, market, you want to check the market leaders. Okay? Blah, 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 blah. So, I'll push it to 26 minutes, that's enough, all right? So this will conclude our discussion today about WXY Elliott wave example that deserve trader attention. As you see that WXY wave may end up being a gigantic flat correction, we will see. We don't want to ignore the higher degree wave count. When we are analyzing WXY wave as it's forming, you don't know how it's going to form, what's going to happen. No one knows whether it's going to be a WXY wave until it's formed. And all right, after the trending firm, highlight the sweet spot Fibonacci trending zone and watch the median line between the 50 and the 61.8% level. This is a great example here of WXY wave that may end up being a gigantic flat correction. We will see. All right. If you want to know more about WXY wave, go to www.24elliottwaves.com. Click on WXY wave. There are videos there. I discuss many topics over the months, or should we say years. All right. A trader did ask me a question about this pattern, and I start talking about it to traders. Okay, so sometimes trader will ask a question and say, Joel, I asked you a question about third wave, you didn't answer, and then one day like this, here I am talking about it. Probably you already unsubscribed. You say, Joel, you let me down. Don't feel that way, okay? Stay put, please. We don't want you to unsubscribe, okay? If you like this video, please give us your beautiful thumbs up. If you dislike it, be sure to mark it down. I want to know whether you dislike it or like it. It's very important for me personally. But see the thumbs down, I pay attention to that also. If you thumbs up, I pay attention to that, okay? The things are the sunshot tutorial. Feel free to share with your friend on Google Plus or Twitter or Facebook. By sharing it, okay, you are helping other traders so they don't also mess up your trade, because other traders can mess up your trade. You don't want them to be doing that. All right? So annoying those crazy stochastic traders. All right? So share it, all right? And also, one more thing I need to say about sharing it, because if I see videos, videos having only 50 view, 40 view, I leave the channel, rest the channel for months. That's what's happened, all right? So if I don't, my channel is a niche channel. So in my mind, I'm expecting at least 100 views per video. So if I'm seeing video below 100, I try to rest the channel, all right? I'll rest the channel. I'll go and look for something else to do. For me, it's like a waste of time. So if you share it, you are helping us. So I'm watching the view. When it comes near 100, then I'll post the next video, unless it's a topic that does not interest Elliott wave traders at all. So I watch those things, the view, the rating and everything, and I'm working with that, okay? If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. And be sure to click on the notification bell, because we are live streaming video now. So when we are about to live stream a video, all right, you will be the first person to be notified. Also, Google will tell you straight away, as I'm posting a video on YouTube, Google will tell you that John will be live streaming video at X time, all right? Now, again, something like 2 hours. I usually give 2 hours. And then 30 minutes before the video will start live streaming, Google will send you another notification, which is very good. Probably you have forgotten. That's another reminder. That's it. If you are free, You can watch it. If you don't, sometimes they will watch it, part it, and they go away, and they come back another time. Maybe they are in the kitchen cooking, they are chef, or they are not allowed to watch your video when they are cooking in the kitchen as a chef. So they switch on their mobile phone, they listen to me for a while. The chef is coming, the head chef is coming, they put it under something, and I see all those movements. Okay, this to make you laugh a bit, okay? Click on the notification bell, especially if you're on Facebook. Subscribe to our YouTube channel, because sometimes I'm posting video first on YouTube, sometimes first on Facebook, okay? So you can track me and know what I'm doing. So, Joe, you said 10 minutes. Yeah, that was my intention. I don't know how I get to 30 minutes. Traders, forgive me, okay? So this will conclude our discussion today about the WXY Elliott wave example that deserve traders' attention. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Thank you for watching, and I will speak to you very soon.